Yes, it's the highlight of your week. It's the stock market update. Everything's still looking nice and bloody expensive. That's not good. What is good is that actually some of the stocks that we're going to look at are expensive yet doing well. That's making us money. Energy is cheap. This is price earnings ratios, share price, basically what you're paying for every dollar in profit, and the ones in green suggest you're paying less than the ones in red. Of course, it's an oversimplification of valuation, but the market likes oversimplification. If you met some of the people in the market, you'd know why they like things simple. So you can see there's only two real major areas of value. What about if we look at everything, which is what I'm going to do? What if we look at not just value, but growth in earnings and revenue, dividend yields as well, cash flow, momentum, because we know all these factors can impact a stock's likely movement. And what if we did that and looked across over 10,000 companies? What might be some of the more interesting ones? So let's have a look at how things are going to progress. Now, first things first, if you haven't, have a look at alpeshpatel.com/links. Follow me on LinkedIn. This has been the performance of the week, and it hasn't been spectacular. As you can see, overall, very little which has gone up. On a price earnings growth basis, which is this chart, again, the things which are undervalued are Berkshire Hathaway, Energy, and I've posted on my Telegram channel if there's any opportunity for special situations there, and I didn't really find them out of those. I just felt too risky, even though they're relatively cheap. How's index performance been? Well, we're knocked down now to just up 34% from 44. And really most of that's been in that direction. But remember, we only got to pick 15 to 40 good companies. So the fact that the broader market is falling is obviously not as good as if it's rising, because then we'd have a tailwind, but it's nothing necessarily to panic about. The S&P now only up 10%. It was at one stage up 19% this year up here, so people have given up a lot. And of course, for those who have gained quite a bit this year, particularly in their pensions, and as I say, some of my students who were NASDAQ heavy in their SIPs and ISAs and started in January in picking those portfolios are up about 100%, and if they were S&P heavy, they're up about 30-40%. Those, of course, who started in July, well, 12 months isn't up, and there's more of a headwind. So they're not going to get up 100% within just 3-4 months. That's just the markets. How does the FTSE 100 look? Well, I still, as I've been saying for a long time, see that as a decline and expect this to fall off somewhat. However, oil, because it's oil heavy, should give some degree of protection to downside risk. Now, this is the important one. As I have said on multiple occasions, we are in a downward trend. That's what I have drawn there. I will zoom in for those of you not watching this on YouTube, where it's easier to watch. If you're watching it on TikTok, I've zoomed in. You can see the lower band, and we're bouncing off there. Will we break below it? I do not know. There is a danger we will, because the weekly MACD, which is the blue solid line, is strongly moving lower. However, the monthly MACD, which is more important and a stronger suggester of direction, is flat and just hovering along the lines of its own moving average. Now, what does that mean? Well, it's going sideways. So these prices, yeah, I'm afraid, boring comment, could either go that direction or this. What's more likely to happen? I do not know. We wait and see. You know, it could be that it does this, in which case it just all falls lower and we end up sinking a bit lower. Or it could be it just flatlines for a bit longer and probably goes sideways. That's my bet. I suspect it'll go sideways. There's your monthly seasonality of moves. And again, October and November tend not to be too bad, or December for that matter. Okay. Apple, we've got a support. Now, as I've said in previous weeks, to simplify things, I'm going to break that down into 3 decisions. Do we buy, hold, or sell? Okay. Now, I happen to hold some of Apple already. That's why hold comes in. If you don't hold any, there's no, it's more hold your horses than hold Apple in that case. Now, with something like this, of course, I've looked at all those fundamental factors. I don't really take much notice of the analysts or seasonality. So my decision with my holding in Apple becomes, well, am I looking to buy more? Well, given market headwinds and what I've said about the S&P 500 and that this is also flat and this is falling, I'm not looking to buy more, okay? Am I looking to sell? Well, no, because I'm not risk averse. I'm not trading my investments, and it's got something of a base there, and this isn't falling sharply. It's not doing this, so I'm not looking to sell. If it does that, then we'll make that decision when we come to it. So we're not looking to sell. So what are we left with? We're left with hold for these reasons and the broader S&P 500 reasons. We'll call that the Apple strategy, shall we? Okay. Now, don't forget to like and follow for more, because I thought that was a really good explanation I just gave there, and I think you should like my videos where you can. Now, this is what the analysts think is the return potential, 14% if we go from current prices to average. I don't really care what the analysts think, but yeah, it just gives you some background information there. Alphabet, for similar reasons with this, we are going to have the Apple strategy. Okay, for similar reasons. Apple strategy. Microsoft, you know, had a good little rise yesterday, did all right. So Apple strategy with that, and certainly everybody's happy and everyone's going to get excited. Who knows? Maybe that'll push the whole S&P 500 up. But you might say, well, why are you not buying more? Well, in this market environment, my own personal risk assessment is I don't really want to get into more. So I'm not buying. I'm certainly not selling. So I'm holding, which is the Apple strategy. And that's where we are with it, okay? Amazon, similar reasons, Apple strategy. I know this is weekly is falling sharply, but this is sideways. Now remember, I have looked at the fundamentals as well for all of these. So that's still Apple strategy. Disney, as I've already said to you, not looking to do anything with this, certainly not looking to buy, not looking to short either. And it's just flatlined. It's just going sideways for a long time. So it's just there as a bellwether to give you more of a flavor of what's happening in the markets outside of tech. Okay, so that's Disney. Nvidia, well, I've given you this strategy many times before, and the Nvidia strategy is if you are risk averse and you are looking at this and you're thinking, oh my God, it's overbought and can only go downwards as it has done in the past, and you're getting a bit worried, then you might say, well, if it drops 10% off the highs, I will sell 20%. If you're risk loving, you will sell a small amount. If you're risk averse, you'll sell a bigger amount depending on the fall. And you'll work that little matrix out to suit what you're comfortable with. So if you wake up at 3 in the morning, you don't suddenly have a panic attack because you've worked out what's suitable to give you peace of mind. Now, if I had perfect witchcraft-like time machine crystal balls, then I would tell you exactly what you should do with Nvidia, but I don't. So all I can say at the moment with Nvidia is it's a hold, and should it fall 10%, then I might look to sell 10, 20%, but I'll wait to see what happens before making that decision. But for the moment, Apple strategy, okay? Or we'll call it the Nvidia strategy. Depends how much it falls, is how much you exit. Analysts quite like it. Tesla, I've got out of, it fell off there, and it was a special situation anyway, so I exited, as I said I would, on Friday's broadcast, and that's it. Where, you know, I mean, you might say, well, why didn't you wait? Look, it's flatlining and just keep holding. Well, it's fallen below that support, and I've got enough exposure on other markets. The market's quite broad, but Alpesh, you're supposed to have held for 12 months. That's the rule, even for special situations, unless it drops 25% from its peak. You're absolutely right in all of those situations. However, I can overrule that, as you know, with my flow chart. If I get risk averse on a particular stock and I just wanted to clear out some of my equity holdings, I just don't want to have so much exposure. So that's Tesla, but as a bellwether, we'll keep an eye on it for you. So don't worry on that front. And it's not to say it's a bad company forever, it's just in this market environment. So that's Meta, that's the Apple strategy, okay, with Meta. Or you might use the Nvidia strategy with it, entirely up to you. ServiceNow, I've still got the Apple strategy. It's been painful watching this because I've got a large position in it. So of course it's painful despite all of this and some of that. But it's still the Apple strategy for now, okay, on ServiceNow. Cisco is also the Apple strategy for the same reasons I gave for Apple. Netflix. Now I've added this because I mentioned it as a special situation on my Telegram channel. If you don't know where the Telegram channel is, Alpesh Patel OBE on YouTube. So I mentioned it as a special situation and said, of course, as a special situation, it is high risk. It had some great numbers, some strong figures, and I've made that kind of a projection for it, which is pretty bloody optimistic for it, don't forget. And that's where we are with it. So let's see what happens. High risk, very high risk. Okay, that was drawn there because that's the angle of inclination it's had before, and it's similar to that. Can it do it? I tell you what, last night I was watching Old Dads on Netflix. I don't normally watch Netflix. I don't normally watch TV. And I just happened to stumble across it while I was working. I thought, I'll put something on in the background. And it was bloody brilliant. Getting their mojo back. Okay, so that's where we are with that one. Anyway, hope you like that. We've got another broadcast on Friday to give you the full market update on Friday. Until then, have a look at my campaign for 1 million. Have a look at alpeshpatel.com/links. Follow me on LinkedIn. I've got a big drive to get more followers on LinkedIn because I've got about 200,000 on TikTok, but only about 20,000 on LinkedIn and on YouTube. So let's get a tenfold increase in both of those. Thank you very much.